as she presented the interim budget for financial year 2024-2025 on February 1, Union Finance Minister Nirmala Sitharaman appeared confident that the Narendra Modi-led government would come back after the general elections to present the full budget in July. A number of factors indicate that yesterday's exercise was not just a stopgap budget. First, the finance minister outlined a clear fiscal consolidation path for the future. Sitharaman's budget speech revealed that the government intends to rein in the fiscal deficit for 2024-25 or FY25 at 5.1% of GDP, beating the expectations of several economists and analysts. Sitharaman pegged the fiscal deficit at 5.8% for the current financial year, FY24, lower than the 5.9% budgeted earlier. The centre's post-COVID-19 fiscal consolidation plan calls for reducing the fiscal deficit to 4.5% of GDP by FY26. Overall, Sitharaman has projected better than expected fiscal consolidation in revised projections for FY24 as well as budget estimates for FY25, despite conservative tax buoyancy in the estimates.
So, an interim budget is basically meant to be a vote on account, which is like accounting for the likely revenues and the required expenditures for a period of up to 4 months before a full budget is presented. Given this context, we were not really expecting any major policy changes or any major announcements in this budget. What we were looking out for were two key fiscal metrics. One, the fiscal deficit to GDP ratio for FY24 revised estimates and FY24-25 budget estimates. And within this, what capex was targeted for these 2 years. So on both of these counts, the announcements today are actually better than what we were expecting. The fiscal deficit for FY24 is below what was originally budgeted, and the consolidation that is being attempted for FY25 is also sharper than what we were hoping for. At the same time, capex is higher than what we were penciling in for both these years. So this is all very positive. We have some concerns in terms of some of the underlying fiscal math numbers, particularly the non-tax revenues, which seem to be a little bit optimistic. And while the disinvestment numbers are not very large, whether or not they're eventually achieved will depend on market factors.
An interim budget is supposed to be a stopgap arrangement that keeps things running smoothly until the new government can make a full-fledged budget for the whole year. Just before completing its term, the incumbent government makes a plan on how to spend and save money for the next few months. However, the finance minister's budget speech also revealed that the centre would spend a record 11.11 trillion rupees on infrastructure creation in 2024-25. This allocation for capital expenditure for the year starting April 1 is 11.1% higher than the allocation in the current year. As a percentage of GDP, capital expenditure will rise to 3.4% next year, compared to 3.3% in the current year. The government has also allocated a larger portion of the interim budget to construct long-term assets, such as roads and railways, than has been witnessed in 30 years. Capital expenditure's share is anticipated to be 23.3% of total spends, according to the budget estimates for FY25. It is the highest allocation since FY95 budget, when it was at 24%.
I believe that the government has done commendable to be able to project that they will be able to consume 9.5 trillion out of the 10 trillion allocation that was made. And I believe that the major shortfall could be because of the states not being able to spend the money that was allocated to them. Last year, it was a growth of almost more than 30% allocation for capex. This year, it is about 17% on the revised estimate. That is 9.5 trillion and 11.1 trillion in this year. 9.5 trillion is the revised estimate. Therefore, a 17% growth is what I believe is what the economy in a year could absorb. And there is possibly the construction capacity addition in the country that it could absorb that level of increase.
Some of the key measures related to infrastructure were also meant to increase convenience for the general public. For example, 40,000 normal rail bogies will be converted to the Vande Bharat standards. A number of other people-friendly measures were also announced. The finance minister said the centre would launch a scheme to help deserving sections of the middle class, which are currently living in rented houses, slums, chawls, and unauthorized colonies, to buy or build their own houses. With the government being close to achieving the target of 30 million houses under the PM Awas Yojana Grameen, the FM announced that 20 million more houses would be taken up in the next 5 years in rural areas. While it kept the rates for personal, corporate, and indirect taxes unchanged, the government gave relief to 10 million taxpayers grappling with outstanding tax demands. The government will withdraw all outstanding direct tax demands up to 25,000 rupees pertaining to the period up to FY 2009-10 and up to 10,000 rupees for financial years 2010-11 to 2014-15. These measures extend well into the tenure of the next government, which will have to find the resources to fund them. By this yardstick, yesterday's budget was more than just an interim exercise. However, there is another yardstick too. None of these measures can be called spectacular or populist. Thus, some experts disagree, stating that the FM did indeed present an interim budget.
Well, it is interim, and I think it is only doing the things that it is supposed to do. I think if we had seen a lot of pronouncements on the welfare side, etc., then I think it would not be that interim. So it has given in a way a direction. So you can assume with reasonable certainty what is coming in the next budget. I mean, some of the priorities they have listed out, so there'll be more elaboration of those when the final budget comes out after the elections, provided the government comes back to power.
I believe this is an interim budget. There are no major announcements. All the allocations are as per trend with small increases across all the line items. So I believe this has been an interim budget.
It appears that yesterday's budget was pragmatic yet people-friendly. While it wasn't quite a plain vanilla interim budget, it wasn't a pre-election populist one either.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.